episode of Spit On It Podcast. With yours truly, Abdul Diab, my co-host, Mr. Ray. As usual, we got some hot topics prepared for you guys. We're going to be going over a couple things, man. We're going to be going over cover calls, margin calls. We're going to be going over Bitcoin and some other topics out there, like the fight last night with my boy Charlo and what's the guy's name? Castano. All right, so stay tuned, man. Like, comment, subscribe. Let's go ahead and get it in. I'm gonna let my man Terrence go ahead and start this joint off with a brief explanation of the cover calls, and we just gonna relax and kick back and try to take some key takeaways, and we're going to sit here and spin on it and see how we can make some money on it. Because at the end of the day, that's the goal. That's why we're here. So let's go. Let's keep moving forward. And with that being said, it's on you. Take it away, bro.
First I want to talk about the fight last night. I'm really into boxing. I like boxing. So last night we had a good fight on Showtime. Jermell Charlo and Brian Castano it was a fight to unify the belts at 154, and many people thought that Charlo was just gonna knock him out. Castano proved to be he was a worthy adversary last night. The fight ended in a split draw, which I guess either camp probably could have said that the other side won. I'm not mad either way. It was a great fight. Charlo had him out on his feet, and two of the rounds, but Castano applied pressure the whole night. He closed the range in, got under Charlo's jab. Charlo, the bigger, longer fighter, and the more athletic guy. Castano was really crafty. He had real good head movement side to side. He was getting under the jab, applying pressure, getting to the body. And when he got close, he was smothering Charlo's punches. I wanted to see, I like Charlo. I like both of them. I like the Charlos, and I like Errol Spence. I wanted to see Mel go to the body a little bit more. It was open. Castano keep a high guard, and I ain't really see, Charlo a headhunter, so, everybody know that. Just wanted to see him go to the body. I think once he go back and look at the film, and, he gonna see that, man, it was right there. Them groceries was right there for him to eat. Then when he would have went to the body, it would have made Castano drop his guard. Then the headshot would have came. He would have got his kill shot. That's my little brief commentary on the fight. We probably do that from time to time on big fights. I got another big one coming up on August 21st, Errol Spence and Manny Pacquiao. Pay-per-view, that's going to be a big fight. It's going to be a great fight. But I'm going to get ahead and we're going to get into this cover call talk. And we're going to try to sprinkle it in and mix it in with some Bitcoin talk. And, I don't know if you traders out there, Jack Dorsey is putting some money behind Square and trying to make Square a viable platform where we can actually use Bitcoin for things. And so, with that being said, I'm gonna go ahead and pull up let me make sure. Is my chart the one that's showing right now?
Go ahead and start sharing your screen.
Yeah. See if I can show you guys. Let's see. So right now, what you see, I got a chart up of Square, and just some brief analysis on it. Just me looking at this, having it pulled up, you might be able to see like a turn in the market right here. So something like this, I ain't really the technical guy as much as Abdul is. I pretty much just find a level and then draw me a little trend line like right here some support. Basically, looking at support, I'm just looking at a place in the market, or a place on the chart, that's holding as far as price is concerned. You can see right here back in November where it went up, pulled back to this moving average, broke it, pulled back, tested it, and you can see it kind of stayed above it from all the way back here in November, all the way back over here where we are now. This was May, and then you can see it came back to that level, made a little bit of like maybe a shoulder, head, shoulder, and then came up out of this level right here. So I'll probably would draw another trend line right here, and then this area right here. So you can see this would be like a little reversal zone. It came back, tested it, and then went up. So it's in a range right here.
Yep.
So if this would be something that you wanted to do a cover call on.
You could do a cover call on that? All right.
You could do a cover call basically. So basically, I'm going to explain. If I just wanted to get long shares, you just buy it for however many shares you want right here. On the Tasty Words platform, they make it real easy for you to do a cover call. If I click right, I'm going to click right here on cover, and then there it is. And they actually put it on there for you. They showing you, let's see. If you look over here I actually got it. Let's change it around. Now let's go, hit go. There you go. So you see where it's showing you where you buy. If you look down in the bottom left corner, it says 100 shares.
Uh-huh.
It's got BTO, buy to open.
Yeah.
So it did it for me, so I didn't manually have to do it. Basically, a cover call is just for getting long shares. Generally, the generally accepted way of doing a cover call is buying 100 shares and then selling a call against that 100 shares.
Now, how do you make money on that? How do you make money on that?
You make money on it it's a bullish strategy. When you sell a cover call, you want the stock to go up. You're going to make money on it just like buying the stock as it is. The call that you sell, it defaulted to right here at the 42 delta, but I could move this and watch it. You'll see when I move this, you'll see those numbers at the bottom change because I'm taking in less premium. This is 60. I'm doing this at 61 days out. You don't have to do it for this particular time frame. So what you want to do is you want the market to go up.
But when you purchase that, so you short a call, right? You short a call. So basically you're saying you don't want, basically by buying that call, by being short that call, for that call to make money, for that position to make money, the price have to go down, right?
Yeah, but that's not the risk. You make more money if the stock go up.
Why?
Because you bought 100 shares. The call is not the reason. The call isn't the risk. You're only collecting 8. See right here, this is the premium. The bid ask is what, 830. We just call it 830. So you collecting $830 in premium, right?
Yeah.
But you bought 100 shares of a stock that's $230.
Okay.
So if it goes up, if it goes up $30, what would you rather the stock do? Would you rather the stock go up $20 or go down so you could keep $830?
So 830 is the maximum you can get on shorting that call? 830 is the max you can get
from the call.
So the bid won't, so that bid won't increase then? Or is that just if you put the position on at that and the bid increases for that, what does that mean then?
It's not, the only way that call is if the stock goes down. See, you could look at right here on the option chain where it's green,
yeah,
or where it's red,
yeah.
see, you lose money when it gets to the red part. Long as it's where it's green, you make money, and that's what as the stock goes up. Like it's basically they showing you how to make money right here. The one way you can make money on a call. So what people generally do is when you sell this call is gonna actually lose value just over time because you're selling it.
Oh, so you want that thing to go to zero.
Yeah, so let's say, looking at this chart, I'm going to leave this right here and then go back to the chart. You see how it's going sideways right here? Like from the past, 20, 30 days or whatever? What's that, 10, 15 days?
Yeah.
Right here? That call would then depreciate in value. So, keep looking at it right here. You got it at 61 days. This 33 delta call is 830. Now, I'm going to close this up, and I'm going to go to 33 days. Look at that same call. They don't have the strikes right now because it's probably after hours.
Yeah.
So I won't be able to use, let's look at the 40 day. Okay. So, if we move it, basically all I did was move it 40 days forward. Now let's look at that same call. It's only worth 720. So basically, if 21 days go by and the stock don't move, you would make $100 on that call. You see how it lost value?
Yeah.
So what the call does is you can make money if the stock don't go nowhere. Or if the stock, you sell it in a high. See, the IV rank is 21.8. Let's say the IV contracts some more and goes down. The call will lose value.
Right. So basically, you got two ways to make money. Like when you selling the call,
right.
If the stock goes down, or if time just runs out and it just goes sideways.
Right. So you could do something like you could still. Now I'm gonna go back to and look at it. Now, let's say the stock goes down a little bit. You're going to lose money on the stock, but you'll still make money on the call. But the stock is the risk because that's the larger 100 shares is more risk in this stock.
Oh, okay. So like, cause I remember a guy on one of the lessons groups that I was in, and he says, like he holds stocks and he just sells calls against them, when they start going down. So, right. Like you said, like it's a form of risk management. Like you can sell calls against anything to hedge against your portfolio that's losing.
Right.
You can mix it up. You can do anything. It just depends on your portfolio size.
Right. You may not want to sell your stock, so like you could be holding stock in General Mills and getting dividends, or maybe let's say you got the diamonds or the SPY. The diamonds pay a dividend every month. You don't want to sell your stock, so you don't just want to lose money as the stock goes down. So you may come in and sell some calls against your long position,
mm-hmm.
and then that's a way of hedging your portfolio. But if you're just doing a cover call to open the trade like this, like I'm doing, I'm getting long 100 shares of Square. But ultimately, you want the market to go up because if the market goes up, if it goes up $20 on 100 shares, you're gonna make $2,000.
Yep.
You don't care about this 830.
Right. Okay. So basically, what you're saying, if you holding that cover, if you hold basically by doing a cover call. You are the only downside of really doing a cover call is that it cuts into the profit of the stock going up.
Correct. That's all it's doing.
It just cuts into the profit of it going up. But when it goes down, you make profit on the short call, and then you just put that back in the stock. When the stock loses, when it goes down, when you make that money on that cover call, when you make that money on selling that call against that call, you take that profit and put it back in the stock. So it doesn't, and it dampens the loss. So it dampens the loss and it dampens the profit.
Yeah, you don't lose as much if the stock goes down. You still want, and then you can roll the call. So like, if I was holding this position right here and it got to, I probably wouldn't do one at 61 days, to be honest with you. I'd do it closer. You know, I'd be under 40 days, 45 days or under. And just because you can roll this every week.
But
so
see,
like,
but Terry, but Ray, hold on. Hold on. Am I right though? It dampens the loss and it dampens the profit.
Yeah, when you say damn, you don't lose as much. If this was to go down,
what's the real benefit of a covered call then? If all it does is dampens I guess the real benefit of a covered call is to do it in certain times of extreme volatility then, huh?
Right.
I don't know. Maybe I'm saying that wrong.
You selling?
When is the best time to do a covered call then? Or do you do them every?
When implied volatility is high, it's best to sell options. Period. It's when the implied volatility is high.
So how can somebody see that the implied volatility is high?
Right up here at IV rank.
What that say?
On the Tastyworks platform, they have something called IV rank. On Thinkorswim, they have implied volatility percentile. They have IV rank, or you can just look at regular IV.
So what is the recommended volatility rating to conduct option sale?
Plus 30 on the IV rank.
30 or more?
Mm-hmm. That's what the math says at Tastyworks. They say it's best to sell options 30 plus.
And where can you see the probability of profit?
Look right down here at the bottom. I'm gonna show you. See right here where it says probability of pop is 54%.
Okay.
And so if I move this, you're gonna see it change 57%. If I take this call off, you see it, and delete this leg, you see you just got a straight 50-50 shot.
All right, so Ray.
So you increase your probability of profit of making money when you sell calls against the long positions. Like, that's the math behind it. So that's the reason why you increase your ability to make money when you sell calls against stock.
Let me ask you this quick question, man. Let me ask you this quick question. You can find something on that chart with 100% probability of profit, can you?
No, I could probably do something that's not
80 or 90.
Not 100%, but
80 or 90.
Like 99 or 95.
What about 95? Let's see a 95. Let's look at a 95.
All right. I'm going to go to something that's like super liquid.
Yes.
I'm going to go to Apple.
Okay. That's fine.
Let's look. Something where they got like all the strikes. All right. So Apple. I'm going to go to right here, 33 days, the monthly. And I'm going to, let's see, I don't know if this is my platform, my computer moving slow. What? Let's see. It may have opened up more strikes. Let me go to the spot. I got positions open in here. All right. So let's go to.
Now look at like something like a sell. Okay, just go.
I'm about to show you. I'm about to give you what you want. There you go.
What's that right there you just did?
You see that probability of profit?
Yeah.
It says greater than 99.5%.
So what's that then? What's that you just did? What is that?
I sold a put in the spot.
You just sold a put.
Yep.
And what expiration is that?
This is 33 days out.
Oh, 33 days out. And that is, right. So basically what you're saying is that it's going to be above 376. It's going to be above 376 at the end of 33 days.
Correct. So you can make you can set up any probability of profit you want. But see, the risk in that is, this is a low risk trade. So it's a low reward, but it's a whole lot of, if you wrong, that's the 1% of the time that you wrong. First of all, it's gonna margin you $24,000.
Oh, you got to do 20. Oh, that's why you just can't up and do that kind of trade.
I mean, you can do what you want.
If you got $24,000 to be margined on.
Yeah. That's why,
you couldn't do that with a $5,000 or $10,000 account, could you?
No, you can't. Okay, so what you can do is this. I'm going to show you something you can do. You don't make enough money doing that. Let's see. I'll show you what you can. I'll do something for you that you can do, but you ain't making no money. Alright. This is 95%, but you're only making $50. You're making $50. Your max credit, well, you're taking in $50 credit, right?
So you sold a put and you bought a put.
No, yeah, I did a short put spread. So I sold a put. So instead of doing it naked, where you got margin, those funds, I bought bought a put and then made it a spread, so it capped your loss. So the only thing right now that actually my buying power effect is 504. Max loss is $950. Max profit is $50, and you got a 95% probability of profit. So I made you something that's 95% of the time it should win, and you make $50.
In this scenario, you want the stock to go up in this scenario.
Yes. You want the stock, if you look right here at the center of the option chain, you see where it's green. You want it to stay there. Where it's red is where you lose money.
Now, how is that different from buying a call, like on the other side of that same thing? Like, how is that different from just like doing that, buying a call spread, like getting long a call spread or something like that?
Because you're getting, this is you're selling it. So.
I mean, you want the price to go up though, right?
Yeah, they both are bullish strategies. It's just one you buying and one you selling. When you buy, you need the stock to move in your direction. When you're selling, you don't need it to move in your direction. You just don't want it to come past where you are.
Oh.
See, it's the same thing with buying a call and selling a put. If you buy a call, you need the stock to move. If you're selling a put, you don't need it to move. You just don't need it. You just don't want it to come down past where you are.
Right. So the other person on the other side of that trade needs it to move, and then while it's not moving, they're running out of time. So then you collecting.
Yeah.
When the options become worthless.
When you buy an option, you're paying. You're literally buying premium. You're buying time.
Okay.
When you sell an option, you're collecting premium, and you're getting paid off of time decay. You want time to go by. When you buy an option, time is not your friend. You need it to move.
Okay.
So, and that's I'm gonna put one of the things that I want to do is I'll go through and I think I'm gonna do some classes on particular different strategies and stuff like that, and so we can go a little deeper in depth. But basically, what I wanted you guys to get out of a covered call is you're reducing your cost basis and you're improving your probability of profit. It's a bullish strategy. You want the stock to go up. Now you can do covered puts the same way you do a covered call. So in this particular market, it might be better to get short stock and then sell puts against the stock that you're short. So you can do the opposite. So, do you wanna get into some pull up the Bitcoin chart and do a little bit talk a
Sure.
little bit, show them the monthly,
Sure.
it's a lot of
I mean,
people out there in the crypto land that's really scared, thinking that it might break 23.
go ahead, pull up the chart. Pull up the Bitcoin chart.
All right.
You can.
Let's see.
Then go ahead. You can put it on the monthly chart. Do you have Heikenhashi? Can you change your candles to Heikenhashi?
Let me see. I don't think they got. I don't even think it ain't going.
Okay, you don't have to.
Yeah, on
Is that all? Is that all the data that it has?
Yeah. Tastyworks is pretty much a platform for option traders, and you can do everything on it. It just these guys, they hate charts, so they literally hate them. So, but they are adding more stuff to the charting package. They've been adding because people requesting it, so they got to do it. So now you can go like before when they first started. It was a lot of stuff you couldn't do. Now you can come on here. You can pull up your crypto. Let me see if they do it on here. Like right here, you can pull up like 3 or 4 of them, and then trade all of these joints at the same, in and out. Now it's fast. It's the fastest platform that I've ever been on. And they got it real sleek. You see it?
Yeah.
So you can come down here and have like 3 or 4 of them and trade them. And actually, the crypto market is going right now. Like, this is a nice little setup. I don't even know. You see this right here? On Batcoin? Was up. And it hit right here was like this little level.
Yeah.
Yeah. But yeah, I'm going to go ahead. You should be able to share your screen to,
Okay. Let's see.
I got it where you can share. So you should be able to do your thing and pull it up and show it to them.
All right. I mean, well, like Ray said earlier, I like to focus on the outside technical areas, and obvious, like real obvious levels, man. I've been told this is strength, and over the years, this is what continues to pop out at me. I can remember telling one of my partners back about this, but unfortunately I didn't get in it. But look at these levels. I mean, and what I also wanted to tell you guys is to look out for, like Ray said, some lessons. Look out for the website, right? Look out for these pattern recognition lessons, and which will be pointing out stuff like this for those who don't know about it. Now, if you're already a trader, you already know about these kind of things, then you could just skip on by. But also, you can stay tuned because we're going to be covering this stuff on a regular basis. So right now, you can mark this time, July 18th, 2021, 12:08 p.m. We are waiting for the first green monthly candle on the Bitcoin chart. It's as simple as that, right? People might be buying it up under these wicks here, right? People might be buying it up, but there's no telling if the next month is going to open up and go lower and fill those wicks, right? And then come down here and bounce off of this level here, which is around, let me move this thing up, bounce off this level, which is around 20, back down to 20,000. Then we get a clean bounce. So we got to watch this thing, man. We got to watch this thing and accumulate. And so we can catch this rip. What's my case for saying that we're waiting for the first that green monthly candle? Look at what happened when we waited for if we would have caught this first green monthly candle, right? What about this one? Small loss here, right? What about this one? We would have ate for those couple of months. What about this one? You see what I'm saying? And it goes on. It goes on and on. Long-term trading. Long-term trading. So, huh?
Can you explain to them, just in case somebody's on here and they didn't? So when I pulled up Square, my chart, each candle was a day. So on your chart right there, each candle is
1 month. Each candle right here is 1 month. This is the monthly chart, right? So this is easy to keep track of. Tune into the channel. Stay subscribed. We put money in everybody's pocket because it's really that easy. It's really that easy. And
So I was gonna say, explain to them. I would say with the monthly candle, how someone, you could be working a job or whatever.
Yeah.
With the monthly candle, it ain't something that you got to sit in front of your computer and just look at. You just need to be able to look at that chart basically once a week or once a month, because it ain't gonna change until like the month is done.
And so like I said, man,
basically it's something that everybody could do. You know, you don't, like, I think a lot of times when people hear trading or they're trading, they get there are different ways to trade. Yes, there are people who, and sometimes from time to time we do it Monday through Friday. We might make a trade and be in and out in 10, 15 minutes or an hour or something like that. But there are also people who, you know, who invest and buy and hold. And so if you're doing something like this, a chart like a weekly and a monthly might be real good for you to use, where it's not real time intensive. Abdul, could you explain to him, talk to him about those lines on your chart? Your trend lines and your moving averages.
Okay. Yeah, sure, man. Like we talked about before in the first episode, you know, basic support and resistance, right? Resistance, an area in the chart where price is moving up and then starts to move in the opposite direction, and support, an area on the chart where price is moving down and then starts to move in the other direction. Okay, so we just got support and resistance line. And a rule of thumb is the idea that us traders hold is that old support becomes new resistance. Old resistance becomes new support. So if this line is acting as support, we're now looking for it, acting as resistance right here. Now we're now looking for it to act as support, right? And this is just a regular downtrend line, right? The rest of these lines here are just moving averages, right? These are just moving averages, right? Stock is above it, price is above average. This is to identify short-term trend. The longer term your moving average is to identify a longer term trend. It's as simple as that. We don't need these moving averages. They're like training wheels on a bike. You don't need them though. Naked charts are much better. So, but that's just it.
All right.
Anything else you want to talk about crypto?
Yeah, real quick. One of the reasons why I chose to show the Square stock, and then we talking about Bitcoin, is because, you know, Friday some news came out, says Square is creating a new business focused on building an open developer platform with the sole goal of making it easy to create non-custodial, permissionless, and decentralized financial services. Dorsey said Thursday in a Twitter thread. Dorsey, who is also the founder and CEO of Twitter, specified that the primary focus of the platform would be on Bitcoin. So Jack Dorsey is putting a lot of money into Square and making it more Bitcoin friendly. So we may have a place to where we can effectively use Bitcoin in commerce on the Square platform. So one of the things that you guys might want to look for this week is look for Square to maybe make a move in either direction. It may not be, I'm going to look at something on Monday to see what, I'll be watching Square this week to see what it does. You might be able to get some scalping opportunities. And when I say scalping, I mean in and out trades. Somewhere you can make some quick money. And Bitcoin may start to move with Square. So those are some things to look for. Look at Square, look at Bitcoin this week. And as you know, as you start seeing people start putting money behind it where we can use it, I think that should stabilize the price, you know, where it's not as volatile. And then that'll make it pretty much something like gold, where you can put money in gold and gold doesn't really fluctuate. We really need some of these big companies to start emphasizing using Bitcoin. then that's going to give it more validity, on the fundamental side, in my opinion. So might be some, see right there, might be some opportunities coming up. We might get that pop sooner than later. And, that's all I pretty much wanted to speak on. And yes, we are working on trying to get us a website together where we can try to get a little alert service. I'll send out some, we'll have Abdul chart up some stuff like he's charting up. And then just like he's charting up Bitcoin, we may come in here and place a trade somewhere around Bitcoin or somewhere around Square, a Coinbase or something like that, or Riot, and we'll be able to send that out. If you're a subscriber to the website, you'll get an alert. So those are some things that you can look forward to coming in the future. Charting package. Abdul will go over we set up some classes or something where he can show you, how to identify those places on the chart, what to look for.
Mm-hmm.
Got anything you want to add, man, before we let him go?
Man, I guess that's pretty much it, man. It was a pretty packed episode, man. I didn't expect the cover call lesson to go as far as it did, man. But it was so juicy, man. I couldn't stop. I couldn't stop, man. So we're gonna have to save the rest of the material for next week. And that's it, man. Yo, comment down below. You already know how it go.
Subscribe, like, and then I'm gonna put you'll see down in the comments. I'm gonna put Abdul's personal YouTube channel down in the comments, and then I'll put mine down there, and then you can follow, subscribe to all three.
Mm-hmm. Yes, sir. Yes, sir.
Right. And with that, man, we're gonna let him go.
All right.
Peace. Okay.
All right. I'm cutting it.
Might have to cut that in.
I had to pay a little outro on this joint. You already know that.
I wouldn't even. It's cool. I wouldn't.